Hey guys, I'm Brian Chu from the Australian Gold Fund. I am at the Gold Coast Gold Conference and we're at QT. What I'm going to do is I will be interviewing a few people from bullion dealers, company executives, as well as also private investors. So let's check them out. Hi guys, I'm at the 2026 Gold Coast Gold Conference and with me is Legacy Mineral Holdings Managing Director Chris Byrne. Chris, glad to be able to speak with you because I know there's been quite a bit of development and there's just so many people coming to this conference. I think over 400 people in this gold and silver bull market. You're in the midst of the action with with the key metals that are actually hot. Gold, silver, copper, and I think recently you're telling me that there's also zinc and it's a tungsten?
Lead. Lead.
Well, there you go. Now, I always am a little bit tough with Chris because of the share price. It's not necessarily his fault, but this time round, as you're aware, silver went parabolic. Legacy Mineral Holdings shares actually lagged the other silver companies, but to the company's credit, I have paid attention to what's going on. You guys raised capital before, there is enough cash in the bank, there are developments, and I'm going to put it to you, hand you the floor. Tell us, what are the latest developments in the company, starting with the flagship project, Mount Carrington?
Yeah, sure. And I think as you sort of pointed out around that sort of share price, we had a lot of options that were in the money, listed options on the market.
Yes.
Those have all been exercised, which that's where our sort of, as of 30 January, $10 million cash in the bank.
Nice.
Sets us really well up for the remainder of the year. While we do have quite a significant portfolio of exploration in New South Wales,
yes,
we'll continue to have exploration conducted across those under various joint ventures. So they sort of tick along in the background, but you're right that our main focus is on the Mount Carrington project.
Yeah.
We're doing a lot of work up there since we really started to get stuck into that project towards the beginning of last year, really. So we did a new mineral resource estimate last year.
I saw that update.
That grew the mineral resource 75% since the last resource by the previous company.
Yes.
Which really sort of sets, from what we see on that project, this benchmark that from the initial resource that was declared back in sort of 2002.
And let me see whether I remember the numbers right. It was 356,000 ounces of gold resources and I think 22.3 million ounces of silver resources.
Yeah, that's correct.
And how much has it grown to now?
Yeah, so it's closer to 700,000 ounces of gold. Not a huge increase in the silver, a lot of but a big increase in the zinc. So zinc and gold, and they're closely associated in that sort of project.
Yeah.
So what that new mineral resource has really breathed, a new life into the project, in that we now got 34 million tonnes. You're now talking about a serious scale for a deposit, which is really important for the Mount Carrington story.
Yeah.
And as part of that sort of transitioning away from some of the previous focus from past companies, which was on a small CIL gold mine,
yes,
5-year mine life, we're now looking at, with this new scoping study coming out next month, at a far greater mine life, which really changes the fundamentals from the project viability perspective. So, targeting that sort of 10-year mine life, importantly low capex due to the existing site infrastructure, which sort of sits around the 40 to 50 million in existing tailings dams and freshwater dams, for example. But also a really low OPEX operation is what we're expecting. We've known from previous studies it's got low strip ratios, so it could be quite a profitable, long-lived mine, which is again a big step change from the previous owners when it was held.
So previously, this mine, it was a carbon in leach operation, but recently, I think from our conversation just off camera yesterday, you were telling me that there are gold and silver concentrates. So you're looking at, is it because of the sulfides in there, or is it refractory, or how?
Yeah,
exactly what's going on there?
It's a pretty good example, like with some of the rocks in front. When you have, these sort of epithermal systems, which we're in, there's potential for a porphyry copper deposit to exist, which hasn't yet been discovered. But as soon as you introduce copper into the CIL process, it scavenges the cyanide. So that was what really caused historical issues with the last production in the 1990s. If you move away from a CIL approach to a flotation approach, you remove the need for cyanide, which does also help from an environmental and permitting perspective. You're now not having to deal with tougher environmental restrictions and controls around cyanide. But importantly, you move to a flotation, you start to open up the doorway to recovering silver. So in those previous studies that were released were gold only, and only 200,000 ounces. So we're now looking at the bigger, 650, 700,000 ounces of gold and the 24 million ounces of silver in a polymetallic concentrate. The good thing about having flotation and producing a precious metal concentrate is you can deal with the variability depending on which deposits you're mining and which parts of those deposits. So in these types of gold silver systems, and there's very few in Australia. Most silver comes from byproduct, credits from lead or zinc deposits. So there's very few gold silver sort of systems, and it's important to have that flexibility in the processing to sort of deal with the changes we see in that system. So that's also be a very big step change on the project as well.
Right. So are there similar types of deposits with that characteristics in Australia? Because I think normally we've discussed before, silver mines tend to have lead and zinc as largely, so silver exists as byproducts, and then you have some with gold and silver, but gold and silver seems to be rarer nowadays in Australia, and Mount Carrington seems to be one of the more unique mines, along with its peak mines of Aurelia Metals and Kingston Resources and Mineral Hill. Anything else?
So they're similar in terms of the metal packages there.
Yeah.
The actual two deposits that are similar in terms of the epithermal style of the mineralisation is actually Investigator, Paris' project, and Bowden Silver Mines.
Yeah.
The big difference with those projects and ours is they're both gold poor.
Yeah.
So as soon as you add gold ounces to your silver ounces, when you start to look at the overall economics and viability, particularly from a silver lens, your grade drastically increases. So when we look at the Mount Carrington open pits, we're looking at a silver grade, silver equivalent grade at around 105 grams per tonne. You go down to the Silver Mines project. Obviously, they have a bit of a bigger scale, so that's favourable for them. But their grade is closer to 58 grams a tonne, and I think Investigator don't do a silver equivalent, but I think it's around the sort of 70 grams per tonne. So when you couple high grades, one of Australia's highest grade open pit silver deposits, with the sort of low stripping ratios that we'll have on the project, and low capex, they're all the ingredients for like a potentially really, really good. A good mine.
Are there what's the approximate strip ratio that you're thinking in the Mount Carrington project? Is there still quite a lot of surface cover waste rock that needs removing?
No, so it's all most of it's all pre-stripped. So that's again a unique sort of position that we've had, that a lot of that waste rock was already removed in that previous operations. So yes, your waste to ore ratio is really good, and certainly for those initial first couple of years where we're in the high grade gold parts of the system, the strip ratios are like 2 to 1. So again, low OPEX. For every ton of dirt of ore that you're mining, we're talking about a really small amount of waste rock relatively that you're having to strip away.
So, outside of the Carrington project, you got several other projects, and the advantage that Legacy Mineral Holdings has is you have joint venture partners in those. What are the progress in them? And I know that for some context, they're large companies who are the joint venture partners, and they might not prioritize announcing developments in those because of the materiality of it. But are there things that you can share with us about what's going on with those projects too?
Yes, probably at the moment we've got a partnership, an option agreement with Rio Tinto up at the Thompson project, looking for intrusion-related gold and copper systems, as well as another partner, Earth AI, looking for magmatic nickel PGEs and critical minerals in New South Wales. We've also got a smaller, really gold-focused production company, Hilltops Gold, as an earning partner around Harden. And then we also have some other transactions, in the pipeline as well. As that's part of our mandate, is to continually find partners, for these projects and advance them. A lot of them, as we've moved to focusing on Mount Carrington, I guess the materiality of what's going on there becomes less important.
Yes.
But yeah, they're very active in terms of a lot of the work and drilling that's going on across those portfolios, particularly around that Fontenoy project with Earth AI and Hilltops Gold. So we expect to see some good reports there. And then the other thing that's occurred recently is Newmont's withdrawal from Greenfield's exploration. So that means that we've retained our Ballura project.
Yes.
100%.
Yeah.
Newmont spent close to $4.8 million generating targets, only drilled 12 drill holes.
Yes.
And as well as withdrew from a series of other projects in New South Wales that we managed to free peg and that have been brought into that portfolio. So we're assessing the opportunities for advancing that one.
So how much of the funding in the cash balance are you allocating to these smaller projects?
Yeah, they're quite. It'll be minimal.
And when even Ballura after Newmont withdrew.
Yeah, correct. Yeah, we see that we need to maintain the focus at Mount Carrington. There's a lot of targets up there that we're unpacking in terms of that. Spoke a lot about the development opportunity, but really in parallel we've got the discovery opportunity that's really yet to be tested on a project that's had some very shallow drilling. So most of the expenditure that's done on those other tenements is revolving around land access, ensuring that we've got maintaining the currency of those licenses, and then finding suitable partners. And a really good example is the Nico Young project. I didn't mention that.
Yes, I remember that actually recently, where that news, I think, I'm not sure whether I talked to you on via email or had an interview when that deal came through. So please remind our viewers about this.
We, obviously being focused on New South Wales, know the district and jurisdiction really well, and had seen a company struggle a bit like Mount Carrington. That was an administration story, and where we identified that opportunity. The company went into administration, they relinquished the ground, and were able to, again, free peg a nationally significant cobalt nickel project. So 1 million tonnes of contained nickel, 100,000 tonnes of contained cobalt, the largest nickel deposit in New South Wales, and one of, again, not just nationally, one of the world's largest contained nickel cobalt projects. So we saw that as a bit of a fantastic opportunity.
Actually, now that you mention how you paid a very low price from a company that went into administration, I just have to mention to our viewers that Legacy Mineral Holdings is always able to buy some of these significant deposits at rock bottom prices from these companies that have gone broke. And I have said this before to Chris, and I think you probably remember, you always make it off like a bandit. They should basically call you the mining robber baron of central New South Wales, with the ability to just convert value. So that's actually why I have recommended this company to my Gold Star Pro readers, is because you can pay $200,000 or so to buy a deposit with millions, hundreds of millions of dollars worth of metal beneath the ground. And that's why I'm willing to sit here and wait. The share price might not be that great, but what you have been able to do is identify potential, and it's all about patience.
No, thanks, Brian. Yeah, and I think a lot of it, comes down to the formations of our company, in that as we started off, without significant financial backing, being self-funded. When we look at projects, we really need to see that value opportunity, and that could come from a project that might be, struggling in sort of a care and maintenance environment, or for example, the Thompson project, which was again an acquisition that we paid
191,000, I think.
Yeah, we paid 200,000 for Thompson and 190,000 for Mount Carrington.
Oh, that's right. Yes, that's right. 191. I was thinking of Carrington.
That Thompson project is a really good example that we identified that as being potentially misclassified as a different type of mineral system, and we were able to partner with Rio Tinto coming into New South Wales. That's the first time Rio Tinto have done any copper exploration in New South Wales in probably 30 years. So it's quite, again, the rocks, the geology, the model needs to work. And importantly, then we find partners that are willing to test those. As we know, the partnership with S2 Resources and the drilling that Mark Bennett didn't discover what could have been a porphyry system. There's still a big opportunity on that project at Glen Logan, but it's just an example of, putting these ideas out, de-risking it with partners to fund it, giving our shareholders that discovery exposure, and hopefully one of these projects can make a significant sort of discovery.
So final question, what are the next steps in the negotiation for financing to bring Mount Carrington the several steps further ahead to turn it into a production operation?
Yeah, so off the back of the scoping study, we'll have for the first time an idea around what a polymetallic processing pathway looks like. We'll understand, in 2026 terms, what the pricing looks like, the construction costs, and so that'll really form the basis of where to from here, which will be further study work as well. But that's really going to set the framework, and we're quite excited again, just with the sunk capital already on the project. There's a strong value case already existing in that infrastructure there, which we estimate could be anywhere between $20 to $30 million. So that's 20 to 30 million that's not in the capex for a mine restart as a precious metal.
So it's a relatively low cost start.
That's what we're hope fingers crossed that's what it will be. And again, just due to the basis of pre-stripped open pits, a lot of the haul roads are already constructed, we're already connected to the grid, the water solution's already solved for us up there, and again the tailing solution is already in place.
So for the ore that needs a flotation circuit, how much would you need to spend to build it, or will you have access to something nearby?
So this will be a standalone operation. And one of the benefits again from the previous operations is that moving to concentrate, you do reduce it, not having CIL, not having cyanide, you are reducing that flow sheet size because part of that end product is the export of that concentrate through to particularly Asia, China, South Korea, Japan, for smelt, to the smelters over there. So again, you're reducing that front end capital cost as part of that way of production. Okay,
so it will be a relatively less intensive operation, and when need be, you leverage off someone else to deal with the concentrates. You produce a concentrate, you don't refine it further, just send it off to someone and be done with it.
Yep, that's correct,
Well, Chris, it is a pleasure to have been able to talk to you again and to catch up on the company's progress. I do hope that the share price will gradually reflect what I think the projects are worth, and that the shareholders are able to see that ahead of time before everyone else moves in.
Hope so. Thanks so much, Ryan.
Thanks very much. Ladies and gentlemen, thank you so much for your time in joining this video. We hope that you would sign up to our YouTube channel, and of course those who are signed up to the Gold Stock Pro newsletter, you already have first dibs in watching this video. I hope that this has been insightful to you, and let's see how Chris and the team are able to generate additional value and see a market re-rate. Take care, thank you, and God bless.